You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good afternoon, Quasar Markets Live. You got him, Pete Thomas. Listen, Pete, you have been killing it on gold.
Yes.
You said 3,300. Look, we did it, and well, we know what the president said. Talk with trading again once again. But interestingly enough, you've been talking about Mr. Dr. Copper himself. So let's get to it, right? You said Absolutely. To me earlier, you've got a trade. So I want to hear it.
Well, it is. I'm trading it. I'm certainly not making recommendations as a broker to everyone out there. But the thing that you and I have discussed at length is we're not in and out day traders here. Most of our people don't have. They have a life. They aren't trading or scalping all day long. So I'm talking about a position, and the thing that dictates a position for me, Steve, is risk reward, and it's something that the only thing that traders should look at going into a trade is how much can I lose and what is my gain side. And today I'm looking at 439 in copper after one of the largest breaks that we've ever seen. And the upside is probably 6 or 7. So I'm thinking if it was myself alone and I was looking at a position for a long term, and look at that candle, Steve. We've never seen anything like it.
God candle. Yeah, we got a God candle here. So
yep.
All right. So you're saying that you're long here. Are you long futures? What you long here?
I'm long physicals and futures and forwards. I trade all markets, as you know. Let's put it this way. I'm looking at. Let's. I don't want people to talk my position.
Okay.
But I'm looking at a 39-point downside potential, which is its old support point.
Okay.
But I'm looking at an upside of anywhere from 550 to 7. So our risk is roughly 39 points. Our upside is almost 200 to 300. That. So if we do hold this, and that's a great chart, by the way, people, look at what we're looking at here. And so if we're looking to enter something in August, long term, and sit on it and look for the development of these AI sources, a massive demand for copper, as well as building the infrastructure. We're talking about all of those homes that burned down in California, all of the fires that are going on in Canada right now, which are massive. We have a held up wellspring of demand coming for copper. So to take advantage of an enormous break off of these tariffs, which can be lifted at any time, Steve.
Right.
We could have a massive home run here, or we have a limited amount of risk. So for our August trade, if I was recommending trades, which I'm not, but if I was trading and had clients going, hey, I got a 39-point risk and a 200 to 300 to 400 point potential upside, today would be the day to look at it.
So to be able to explain to everybody out there, when he says 39 points, he's talking about the dollar move, right? So he's saying that right now it's 442.80, 39 points would be 42.30, right? So what he's saying is, look in August, back in August of last year, you see August here, look what happened in August, straight up, right? Look what happens. So he's saying the exact same thing. You've been given a gift horse in the mouth right here. There it is. And you can see we've had higher lows and higher highs.
Yep.
But we've had some sell-offs. There's one sell-off back in April. We know that happened right there. That was the FOMO sell-off. And then we had the capitulation. And then here we have this sell-off based on the tariffs, the 2 tariff sell-offs. But what happened right after the tariff sell-off? The last one, straight up. So if he's saying that if Trump pulls back and the taco trade goes on, that we should see another push to the upside. And that's a huge gap. So you expecting a gap fill here?
Well,
Peter?
Generally, Steve, as technicians, and you and I both do our charts, gaps will generally have a 50% fill on par. If we have a 50% fill, it's a home run.
Yeah, so you're talking about the Fibonacci sequence. I'm gonna lay it out for everybody here. So
Thank you so much. I didn't know how sophisticated our viewers are, but it is definitely a fib
So
number.
what he is saying, a 50% retracement. If you don't know the numbers, learn Fibonacci. You'll understand the markets way better. This is the first line, the 78 line, and then the 61 line and the 50 line. So that's percentages, right? So he's saying a 50% retracement back should get us back to about 526. Is that correct?
100%.
100%. All right, I love that.
And remember, stops make you money. So at that point, anytime you're up 50% on your money, you move your stop up. So if you get blown out, you get blown out with something in your pocket. And so if it keeps going, then you follow.
Would you put a trailing stop in there?
I'm sorry.
Would you put a trailing stop in there?
Steve.
Yeah, okay. There 100%. You go, ladies and gentlemen. All right, I'm going to pull this chart off. I'm going to ask a couple of questions, let you go. Peter, I know you're a very busy guy, and I appreciate your time.
I got to run, yeah.
Yeah, but Peter, real quickly, what are the chances of Trump being the taco trade here? And he actually pulls these tariffs off because he went pretty deep here on a lot of countries here.
Look, I'm not going to pretend to read the master of negotiations ahead. The bottom line is what I'm looking at is every Home Depot, every Lowe's, every hardware store, every construction site, everything that's going on right now has pent up demand, and the pent up demand will oversee what he's looking. Whether it has a tariff or not, we will have a base from demand. That base will make the trade safe, in my opinion, if there is such a thing as a safe trade.
That base will make the trade safe. You heard it from Peter Thomas right there, and I agree with him. The retracement in the fib sequence here is pretty strong here, and I like this basing here pretty nicely today. So, all right, Peter, let you go, man. But thanks again, and
thanks again for having me, Steve, and everybody. Good trading, and have a great month.
Bye, Peter.
Bye-bye.